Neo, I was right. Well, I wasn't right. The CCI was right. Remember what I said. Look at all these three indicators. When the CCI gets up above 300, and you see the MACD following also, when you see the MACD bars starting to get up that high, they're going to snap back most of the time. Now, it might not be an immediate and pronounced, but when you see it seeing that black line, the further it gets away from the red slow line, boom, it snaps back. And same thing with the RSI. We can be oversold for quite a bit, but when you see the CCI way high, you see these bars way high, and you see the RSI about 90, it's almost always guaranteed that a drop is coming. As you can see here, CCI was over 400, and what happened? I said, we're going to see a drop. I don't know when. It's probably more sooner than later, and sure enough. Now, granted, the whole market is pulling back, and I do think that the EV space is a little bit in a bubble, but this is actually kind of bullish because you could see that it dropped below the 21-day simple moving average, and this is a bullish candle right here because it had a really long wick and a lot of buyers came in. Everybody started buying it back up. We're going to watch right around here that I could see it bouncing off of the zero line and popping back up. And especially if Neo does cross down through the zero line on the CCI, you can see a lot of times if it crosses down, you wait for it to cross back up through the zero line. You don't need to go below negative 100 always, because remember, it's also bullish if it bounces below the zero and crosses up through the zero. And as soon as it starts heading toward 100, that's always bullish too. So you can play that too. So right here with Neo, I would wait and see what happens if we're going to drop below the zero line or bounce off the zero line. Might be a nice play, but obviously the upper around $21, we do have a lot of resistance. So it's got some work to do to try and break through that $21 resistance to get to new blue sky highs. Tesla, it was spot on. What did I tell you? Look how beautifully the CCI worked for Tesla. Price was going up. Price was in a bullish pattern, but CCI, I said, look at this. Lower high, much lower high, breaking down. Every time you see the CCI starting to weaken and starting to break down, it's just a matter of time. And I said, I don't know how much higher it's going to go. All bets are off with Tesla, but I do know that eventually it is going, well, not eventually in meaning years, but in the very near certain term, it's going to take a dip. The only thing the CCI can't tell you is exactly when and exactly how much, but sure enough, it could have got out right around here when it started crossing down below. When it started crossing below the positive 100 line, could have got out around 475 or so. But we'll see what happens with Tesla. A lot of buyers did come up like Neo before it. It does have a pretty long wick. And again, look at the MACD. If you're not familiar with the MACD, it's just the moving average convergence divergence. When the black line crosses up through the red, it is bullish. And when the black line crosses down through the red slow line, the black is the fast, which is the 12-day, and the red is the 26-day. When it crosses down, you gotta be careful on that. But these bars, just think of them like a rubber band. The further away the black line gets in either direction, it usually wants to snap back and correct. So a lot of people watch the MACD, and a lot of algorithms also trade that. So it's why you can see these following patterns sometimes. And almost, again, always, eventually it will come down from being overbought. You just don't know when. Look at this. You can long periods. You can go half a month. You can go a month being overbought before it comes down. So here it came down, but we do seem to be bouncing in the 50s. I do not, well, actually, look at this. On the MACD, it is officially now negative. That is the difference between the two lines. It is now negative 1.427. So it is crossed below. Not sure what's going to happen with Tesla, but if I was a betting man, I would say we're probably going to chop sideways for just a little bit, as I see the CCI looks like it might flatten out here. And then we're going to get some decision days before people decide whether we're going to go down further or whether we're going to bounce up. But I would say this is pretty good support right around here, right around the 21-day moving average. And I would definitely watch out if Tesla breaks below zero. We're probably going to get some more short term. That's Definitely bearish. If you drop below 0, this is the bear territory, and above 0 is the bull territory. So I have a feeling this is going to be the key right here. If we're going to bounce off 0, or if we're going to break down through it, definitely something you got to keep your eye on this week. Apple, same thing. You had to expect this. It was not as pronounced as Tesla, but definitely a bearish divergence. You can see there was definitely lower highs before it definitely came down. And interestingly enough, we did close almost exactly at my 21-day simple moving average. You can see right here it's 120.39. The blue line, we closed at 120.96, so just a hair above that. Now, a lot of traders do use 20 as the moving average, but I like 21 because there are about 21 days, trading days in a month, so it's pretty much the same thing. Long wick tail on Apple here. Definitely bullish for a bounce as it came way down and the buyers came in. The low was tested and rejected, and everybody came in and just started buying shares right back up. So that's definitely a bullish sign, and we could be reversing trend here, and I would watch for the CCI again. If that bounces up, pushes up through the 0 line, definitely might be a good time to get in if you want to trade it. Blue sky high was 137.98. That's current resistance. We'll see if it can break through. 138 bucks this week as well, and I think it will bounce. Apple, good solid company. Depends on what you're doing, if you're trading it or if you're buying it, but we'll see if it gaps up Monday morning, or not Monday morning, it's Labor Day. On Tuesday morning, we'll see if Apple gaps up, but I do believe that it is going to bounce. Keep an eye on it. Look at the past history. How many times has it, on the RSI, has it bounced off of the 50 line? Quite a few. There's 2, so we're right above 50. This is giving me pretty good confidence that Apple, we're going to see another upswing, and I'll bet it's going to test the 138 resistance that it is been at. I want to take a quick look at Etsy, see what old Etsy's doing. I think Etsy is going to bounce. So we are trading currently below the 21-day moving average, and it closed just below the 60-day moving average. You can see right here, which is at $112.81. Closed at $112.04. I think we're going to get a bounce. We look at the CCI, came up, got rejected, down again. So it's going to make another run here. Remember what I say, it's the same up as it is down. You see, every time we're over 200 or get near 200, price wants to come back down to the normal trading range in here inside the train tracks. Same thing here. When it comes down around 200, currently below negative 225. So I think that CCI is telling us that Etsy is going to bounce a bit. The RSI, the relative strength index, is still in a downtrend, still weakening, as is the MACD. But like all things, as I say, it's like a rubber band. Look at how Etsy's done this quite often. That 0 line, that's 0. So when it gets further away from 0, what happens? Pulls back. Pulls back. Now when it snaps to the downside, it eventually comes back up. So very nice patterns. You can see that's all that these blue bars tell you. They're showing you exactly when it snapped back. So sometimes a good place to jump in is when you see that this is around the 2 level. It will want to snap back either way. So right now it is at negative 2.4. So it looks like it might be bouncing off the 2. So I think Etsy is due for a bounce up, but you can see the highs are getting lower. 141, 135, 129. I would say there's probably going to be resistance right around 125-ish or so. We'll see if it can make it. So maybe around 123 to 125, I think might be the resistance level, and it's probably going to get rejected there, as we see it's been getting rejected at lower highs, lower highs, lower highs. I had a question about Iron Maiden. 2 minutes to midnight. Great band. I love Iron Maiden. A lot of support around the 21-day moving average. It hasn't been below it since mid-July. It's kind of been hugging it. It's been chopping sideways. Look at around 30. It's been hovering around 30 since almost a month ago. So definitely going to have some decision coming here. It's been tight on the MACD. There's nothing crazy going on. When you see, remember, always look for these big bars in either direction. They're like a rubber band. It's going to snap back, and sometimes it snaps back below the 0 line. So when you see the bars, look left. Chart leaves clues. When you see the bars get pretty high up, and you see this average, the moving average, diverging far apart, there's a good chance that we're going to snap back down. A lot of support around the $30 line here as of late. It's probably going to chop sideways for a bit. Keep an eye on the CCI as it is pointing down, as it is tend to do a lot of times if it breaks down through 0 and goes up. But as you can see, you always have to be ready when you're trading. Some of the safest bets, though, are to wait for it to break fully below -100, chop sideways a bit or day or two like it did here, and look for that reversal candle. And when you start seeing it pop up through the -100, that's the safest time to get in. And always make sure if it turns down, if it gets rejected, get out, because you don't know how further down it's going to go. You'll always have a second and third opportunity. And if you miss it coming up through the -100, you can always wait for it to come up through the 0 line, which you will not get as many gains. Always be looking, though. Always be ready, because you can see here we went straight up through, which is positive, bullish, but then it got rejected. Drop back down, try it again. This right here is very nice to see. When you see a higher low on the CCI, there's a good chance it's going to have a nice run up, and here it definitely did. You could have got in the second time around the 22 and rode that son of a gun all the way into the upper 20s. That is Iron Mountain. I think Iron Mountain is going to chop sideways for a bit and potentially go down, and look for it to, if it closes well below the 21-day moving average, might be a good time to get out if you're trading that sucker. 3M, if you're trading it, I do think we're going to go a little bit lower. CCI looks like it's coming down, and is it, again, close to 200, comes down. When it gets to 200, it comes down. You could see right here, definitely had some bearish divergence. There is a lower high on the CCI as price is moving up. So that's always something very key, like I showed with Tesla. When price moves up, but you see the CCI starting to weaken, it's a good idea to think about maybe getting out if you're trading. But as we are here, we hit a high, a little bit of resistance around 170, resistance here at 168. Nose through it, and then right back down. MACD isn't anything too crazy. There's been a lot of support as of late around the 160, but a lot of big support around the 149, 48, 149, 147. So the upper 140s is a ton of recent support. So I would not, if you're going to trade it, I think it's going to come down this week, especially if the overall market is bad. Definitely look for it to come down around the 60-day moving average before it might get in. Keep an eye on the CCI if it's going to bounce. Again, I love charts. Just look at the MACD. If you start seeing it get way up in this range, chances are you're going to snap back. So sure enough, down to 137. And it started coming up. It bounced off of the slow line. Same thing with CCI. Bounced off 0. So a lot of times a bounce off 0 is bullish. But then as soon as it comes and breaks through the positive 100, it's usually a good sign to get out. Every stock trades differently. As I say, always remember to look left. Chart leaves clues. And you can see on the RSI, it usually doesn't like to break out of its normal trading range. So when it does, it kind of takes a dip. Very chopping sideways, but you can still play it. Look at the CCI. A lot of times when it comes up through, every time, let's take a peek here. Came up through -100. You could have rode it all the way up to, you could have rode it from 130 or so all the way up to the mid 160s. Next time it broke through, you can see here. But every time it comes up through the -100, it goes up. So we went up from the upper 140s to the upper 150s before it got rejected at 0 and dropped back down. Same old story every time. So just look left. Chart leaves clues. As soon as you see it come up through the -100, and this will always show you what it is if you're not sure. Right now it's at 120.90. 120.90. You can put these parameters in for yourself if you scroll down. I have a video where I did that. But if I was trading 3M, I would wait just a little bit more, get some confirmation. A lot of volatility in the market. Might be a good time to short it. If you want to short it, I think we might go down to the 160 range. And if it breaks through that, I would look for support to buy in again around the 140s. And that is 3M. Leave me some comments below. Let me know what you think.